Hi guys, today I want to talk to you about stocks and why this time might be the best time to go into the stock market. That's if you're a beginner, or the best time not to panic, fret, and sell and follow the plan. Okay, because yes, stocks are falling, but smart investors are smiling. Okay, because when market crash, that's when transfer of wealth actually happens. Okay, and the mistake you can make is to panic and sell at a loss. Now, let me be clear. I've always said it. If you have not seen me before, go to my previous videos. There are steps to investment. That's why this wealth school is to educate you and for information only. There are steps to wealth. And if you skip the steps, you will have problems. Okay. Now, part of these steps is starting by getting knowledge. Okay. Build your emergency fund, go into investing. And there are different investing instruments. But today I will be talking about stock. Okay, now we know about the S&P 500, the US stock. We know about the emerging market stock. Okay, now in the S&P 500, there is a group of stock called the Magnificent Seven. That's where the Microsoft, Nvidia, Amazon, Tesla. And due to this Iran and the US-Israel war, everything is on sale, everything is on discount. Now, the retail investors, which is you and I, many are panicking. But this is exactly how opportunity looks. But the problem is most of you don't recognize it because many don't have the knowledge and many have not been well, vested into the investing stuff. Okay. But the truth is that they fall, they crash, but they recover. History proves it time and time again. And they grow to new highs. So this is like you buying a discounted price, especially when you go for the business with the good fundamentals. Okay. Now let me give you a start. In the year 2000, there's what they call the dot-com bubble. Check it. The market fell totally, and people thought tech was finished. Okay. But many companies survived. See, today Amazon is here, and Amazon went on to become among the giants. Okay, this happened again in 2008 during the global financial crisis. Okay, that period that real estate collapsed and everything. People that stayed in the market, they made it. Okay, because when fear is everywhere, that's when smart investors are actually more confident. Okay, but when people are greedy, that's when they get scared. Okay, so also during COVID, many people were busy wondering if they will live or survive. The smart investors were investing. And after the COVID era, you saw how the richest people on earth add billions to their net worth. Okay, so when markets drop like this, especially sharply the way it's dropping, that Microsoft has lost, from what I saw, since 20, as in 20 September last, Microsoft has lost almost 31% or something of their net worth. And you think Microsoft is going away? No. So these are periods you utilize this opportunity and position to execute. Okay, because historically there is always a reset. Most times it's man-made, just like this Trump war that is a war of choice according to many people. Sometimes it's natural phenomenon, but the system always recalibrates itself. Okay, so don't wait for perfect bottom. If you're an investor already, don't wait that I want to wait and be sure when it falls totally down, then I will go in. I want to be certain. I don't want to buy and lose some, because by the time everything feels safe again, the institutional investors would have positioned that the market would have shot up again, and the price would have, you would now be like, oh, I would have bought then. Okay, so This is why there is this straight principle which I always tell my students of my school of wealth and my friends, okay? It's not about timing the market. It's about the time in the market, okay? Because people who build real wealth, they are not into guessing the bottoms. No, they don't say, let me wait, let me watch, no. They do something more simple. Investing is very simple, okay? Very simple, okay? They do what they call the dollar cost averaging, meaning don't put in the lump sum at once. If you have dry powder, like money you kept aside for this kind of situation, okay, rather than going all in, invest it gradually, okay? Meaning when the price continue to go down, continue. If you tell yourself you're investing twice weekly, follow that principle. When it goes up, still follow that principle, okay? Over time, you average the costs and you remain in the market, and that's when you see people making 50%, 30%, 60% from the market, while some others will just be struggling to make ends meet, okay? So in a nutshell, stay disciplined, okay? Invest regularly, okay? And focus this period on only quality assets. Don't go for penny stocks. Quality asset is asset with great fundamental that we know that their utility remains evident. Microsoft is not going anywhere. AI has come to stay. Okay, Amazon is still one of the biggest e-commerce markets in the world. So just know that these companies, their fundamental has not changed because of the Iran war. It's emotions that is affecting the market. And eventually, when things stabilizes, the fundamentals will catch up with the emotion. And that's when the people that positioned and executed today will benefit, okay? So if you want to know more, be following my School of Wealth. It's free. I'm giving you this knowledge for free. I research so deeply. I read so deeply. I'm just giving it to you because young people need to understand that wealth is not as difficult as they think if they follow the principles. The principle is just simple. Choose a skill or a trade. Skill to get income coming in. Invest. There are different instruments. Be steady on that investment. Live below your means. Okay, it's simple. And continue building yourself. Over time, you will see the difference. Okay, and in this wealth school, we don't just motivate, we give you real talk backed by evidence. And it's not an investment advice, it's educational. You will decide how to go about it. So in a nutshell, if you are not in the stock market now, you are saving money in the bank, you are wrong. If you are in the stock market and you are panicking and you are pulling out your money, you are also wrong. And if you are someone earning real money, real meaning any money that can take care of your bills and you can be able to struggle to have something out of it, and you are not utilizing this moment, you are also wrong. Okay, so follow for more and see you on the next video. Have a